You can design a trading system in 6 simple steps. It's pretty fun designing a system and testing it out. It is so cool to see people go from not knowing anything about trading in the Forex market to designing their very own trading system. So we're going to cover the 6 steps in this section. Before I get into it, I wanted to let you know that once you design your own trading system, what takes time is testing the system. So just remember to be patient. It is definitely worth it. A good trading system can really make you a lot of money. All right, so take out a sheet of paper or something to jot down your trading system, and let's get into the 6 steps. Step 1 is determining which time frame you're going to trade on. This is going to depend on what type of trader you are. Are you a scalper, day trader, swing trader, or position trader? So do you like looking at charts for a few hours a day every day, or just once a day every day, or once a week, or even month? How long do you want to hold on to the trades you get into? Your answers to these questions will help you figure out which time frame is best for your trading system. Of course, you're still going to look at multiple time frames, but this will be your main time frame that you use when you're looking for a trade signal from your trading system. So like we talked about, scalpers might use the 1 minute, the 5 minute, or the 15 minute, possibly even the 30-minute chart. So those smaller time frames would be for a scalping strategy. Day traders might use the daily chart, the 4-hour chart, the 1-hour chart. Swing traders might use also the 1 hour, 4 hour, the daily, and then position traders might use the daily, the 1 week, or even the monthly chart. So just depending on your strategy, you're going to choose what's your main time frame for your strategy based on what type of trader you are. Step 2 of 6 of developing your trading system is finding indicators that help you to identify when a new trend is forming. One of our goals, remember, is to identify new trends as soon as possible. So we have indicators in our trading system that help with that. One popular indicator to identify a new trend is moving averages. If you remember from the moving average section, if you plot 2 moving averages, one fast and one slow, and you wait until the fast one crosses over or under the slow one, it is usually the start of a new trend. That's called a moving average crossover system. There are many other indicators like you've learned that let us know when a trend is starting. So you can go back and review the different sections on different indicators. We're not going to cover all the indicators in this section, and you can decide which indicator you want to use to help you identify when a trend is starting. The third step of the 6 to create your mechanical trading system is to find indicators that help out with confirming the new trend has actually started. Remember, our second goal is to avoid getting faked out by signals that look like a new trend is starting, but really it's nothing. This is where confirming our first signal of a new trend with another indicator comes into play. We've learned about a lot of good indicators that confirm trends, such as MACD, stochastic, RSI, and many more. You'll become more familiar with other indicators and find the ones you like the most to add into your system. So now you have your time frame, you have an indicator to help you determine the start of a new trend, and you have another indicator to help you confirm that trend. So in step 4, we are going to define your risk, or how much you are willing to lose on each trade. A lot of traders don't really like to talk about losing, but good traders think about how much they could possibly lose before thinking about how much they could possibly win. The amount you are willing to possibly lose on each trade will be different than everyone else. We all have different risk appetites. It's tricky because you have to decide how much room you want to give your trades so that they have enough breathing room to move up and down and not hit your stop loss before it hits your take profit. But at the same time, you don't want your stop loss super far away so that if it hits your stop loss, you lose like 50% of your account. We're going to talk about money management in an upcoming module, and that's going to help you with this part. So if you're not really sure, you can leave this part blank in your trading strategy, and you can come back to this later and determine how much you want to risk per trade, what you want your lot size to be, how far away you want your stop loss to be, and all those specifics. Moving on to step 5, you're going to define your entry and exit criteria in order to get the most profit. For entering trades, some people enter as soon as the indicators match up, even if the candle hasn't closed. Others wait until the candle closes to see if the indicators still all match up, and if they do, then they get in. You can choose what you want to do, but I have seen when everything matches up in the middle of a candle, that by the end of the candle, nothing matches up, and I realized if I had gotten in before the candle closed, the trade would have gone against me. You can be more aggressive or less aggressive and find what works best for you. Once you are in a trade, you have to have exit criteria in your trading system. You have a few options. One option is to trail your stop. That means that if price moves in your favor by X amount, then you move your stop loss by X amount. Another option is to have a set take profit. So as soon as price gets to a certain level, you want the trade to close in profit. For example, you may place the take profit to be at a support or resistance level. Other traders choose to just go for the same amount of pips on every trade. So their exit criteria might just be as soon as the trade moves 20 pips into profit, the trade will close. This is a way to have a fixed amount of risk. Whatever you decide to do to calculate your target, you have to make sure you follow it to a T. Even if you're tempted to exit early, like if you're in profit and you're like, oh, I just want to close this and take the profit, you have to stick to it like a robot and just follow your trading system and rules. The final way that I'll mention that you could exit your trade would be to do so as soon as a set of criteria matches up. For example, you might have a rule that if your indicators reverse and get to a certain level, then you're going to exit the trade. The final step is step 6, which is to write down your system rules and follow them. Hopefully you've been following along and writing down some ideas for your trading system. You have to stick to your system and stay disciplined or your system will never work. So at this point, you may or may not have a trading system written out. If you're still confused on how to set up a trading system, we'll go over an example in the next module, so no worries. But once you have a trading system written out, it's time to test it. There are 2 steps to testing your trading system. The first is to look at previous market data and see how things would have played out following your system. For example, here we are in the MT4 platform. I want to show you how you could backtest your system looking at historical data. Let's say that if the fast EMA is underneath the slow EMA and the market is overbought, then you're going to sell because that means that it's in a downtrend and the market is overbought, which means it's a good time to sell and you're going with the trend. Or vice versa, if the fast EMA is above the slow EMA and the market is oversold, then you're going to buy. So what you would do is you would just look at past historical data and see when that would have lined up. And just so that there are more examples, I'm going to change the overbought and oversold conditions instead of 70-30 to 60-40. All right, perfect. There you go. So what we're going to do is look for example, when the fast EMA is under the slow EMA, we're going to look for when the RSI is overbought, right? So that we can sell while it's in this downtrend. So for example, we have one here where it reached above, one here where it reached above, and those are the only 2 while the fast EMA is under the slow EMA here. So what you can do is if you want to grab your vertical line, you can do just that and map these out. So I'll map out a couple examples here. And then we'll move over here where the fast EMA is above the slow EMA, which means that it's more in an uptrend. So at that point, we're looking for the market to be oversold, which would be one right here. Let me put that. Perfect, right there. All right, so I'll just stop there for a couple examples. So you could go back and do this for as long as you want, backtest as far as you want, but see when your conditions match up from your trading system. And then from there, you can see how it would have played out. For example, you can see here that you would have sold because it matched up here and the fast EMA was under the slow EMA. Everything matched up on your trading system, the criteria. So from there, you can see, oh, if I had gotten into that sell trade, I could have won 80 pips right there. Or you can check here on this one. If I had gotten into a sell here, well, I would have been in drawdown at first for about 10 pips, but then it would have dropped nicely here or even over here all the way down to another 70 pips. And then we can come over here to this one where you would have gotten into a buy. And we can see that had you bought on this candle, that you could have made a small profit of 17 pips, possibly 22 pips with pretty much no drawdown. So this will give you an idea of how far you need to set your stop loss away from your entry price that you got into and about how much you can set for a take profit. Or if you don't want to have set stop losses and take profits, then you can see what strategy of exit criteria would be best to really capitalize on all these trades. So that's how you can backtest in the market. So you can see how your strategy would have played out with several trades. So you can come back more, map out more trades that match up with your criteria, and then see how they would have played out. And you can kind of set your exit criteria based on that, what you see working well. This will give you a good idea as well if it's a strategy that may be worth testing going forward in the market. So that way you could start manually trading with the same strategy going forward and have the confidence that if you stick to your trading system, even if you lose a trade, it's okay because as long as you have more wins than losses or you net more pips than you're losing, then you're going to end up profitable and you need to stick to a T to your trading system. Remember that. So what you can do here is record all your wins, losses, your average win, your average loss, and this will give you a good idea as to whether your trading system is good or if you need to tweak it a little bit. And then once you feel like your trading system is pretty good, you can open a demo account and use your trading system to a T. I would demo it for at least 2 months to make sure that your trading strategy is working well in the market going forward and working well with your emotions and everything else. But this will give you a good feel for how your trading system is working in the market. It's very different backtesting on past data and trading live, like I said, because your emotions get into it and there are a lot of other factors. So once you're getting good results on a demo account, trading this going forward, then it's time to open up a real account with real money and start making money from your awesome trading system. You should feel very confident in your trading system at this point. And if you just follow the rules of your trading system, just like you were doing on your demo account with your real account, you will start making profits in no time.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.